The sharp sell-off in IT stocks over the past few weeks, triggered by global concerns around artificial intelligence-led disruption, has rattled investors and compressed valuations. Yet fund managers say that the market reaction may be running ahead of fundamentals. Technology stocks have been among the biggest drags on benchmark indices in recent sessions, after the rollout of advanced AI tools by Anthropic unsettled global tech counters and spilled over into Indian markets. The growing narrative that generative AI could cannibalize traditional IT services revenues, particularly in areas such as ERP implementations and legacy system management, has weighed heavily on sentiment. After witnessing a 7% decline in the previous week, IT stocks remained under pressure, falling another 6% so far this week and dragging the Nifty IT index to a 10-month low on February 12th. The correction has been accompanied by a clear valuation reset. According to Bloomberg data, TCS has seen its PE multiple contract from 29.0 times at peak to 19.7 times. Infosys from 29.2 times to 20.3 times, Wipro from 25.7 times to 17.4 times, and HCL Technologies from 27.0 times to 23.9 times. Tech Mahindra has eased from 36.6 times to 32.8 times. Among mid-tier players, Coforge has corrected from 58.4 times to 39.1 times, and Persistent Systems from 65.8 times to 49.2 times. The broader Nifty IT Index PE has moderated from 28.3 times to 24.7 times.